Welcome to our 2023 webinar series. Each month you'll learn about insurance solutions you and your clients can consider, plus the significant impact on insurers and their post-pandemic strategies. Each webinar will last about 50 minutes, and you must be logged on for a full 50 minutes to receive CFP credit. Please be sure to ask questions as you have them by typing them into the questions box. We'll answer all questions at the end of the presentation. Today's webinar is being recorded and will be posted later on this week. Today's presenter was recruited from one of the top disability insurance providers to be our second disability insurance specialist. Since 2015, he has been helping many advisors and their clients with not just disability insurance, but also life insurance. Here to present on protecting your business with life and disability insurance is Ryan Ciccarelli.
Thank you, Claudia. Thanks for the introduction, and welcome everybody. Thanks for joining our webinar today. And here at LLIS and as fee-only advisors, we're often focused on protecting individuals and their families. Today's focus can be a little bit different. We're going to be focused on the business owners and how they could help protect not only their businesses, but also their livelihoods. Many of you are business owners, just like the small businesses we will be discussing today. And while this discussion will be on protecting that business, it all trickles down to protecting their incomes, their families, as well as their employees. All right, so today we're going to be talking about buy-sell agreements. What happens if a business owner dies or becomes disabled? A business will need a transition of sorts. We will talk about the efficient ways to help make this process much easier with proper planning, that is. Disability buyout. Disability buyout is another option to fund. If a business owner becomes disabled, it'll help buy out the business owner shares. Also, we'll be looking at business overhead. This is a great option to help keep the business afloat. While the business owner is out on disability, we want to make sure the rent is paid, make sure that we're able to find a replacement, make sure all the loans, etc., are paid for. We're also going to talk about key person insurance. Key person is vital to a business, could help bring in a lot of revenue or help the operations of a business. We'll talk about options here as well. And then lastly, we'll follow up and talk about group solutions. There's lots of exciting things going on in group insurance. We have some great options and also some more affordable than you'd probably think. So let's look at the statistics. There's 33.2 million small businesses in the U.S. 99.9% of all U.S. businesses are small business. And 20% of those new businesses fail during the first 2 years. 45 fail in the first 5 years. 65% will fail in the first 10 years. But 25% of new businesses will make it 15 years or more. There's a lot of business owners out there that could use the advice of a financial advisor. So what is a buy-sell? It's a written agreement that determines who's going to buy and who's going to sell if an owner passes away or becomes disabled. Well, there has to be a value to the business, right? And that's all part of the buy-sell agreement. You have to determine what's the value of the business, how much ownership does each owner have, and this is a very vital part of the entire process. Everyone has to agree. Usually you enter this agreement with an attorney. They'll draw up the buy-sell agreement, and the life and the disability insurances are the vehicles or ways to fund the agreement. So let's talk about buy-sell protection with life insurance. It's funded with life insurance. It's used to provide funding for partners or shareholders purchase each other's shares. And we talked about a buy-sell agreement, so this is a vital part of the process is to have the buy-sell agreement. Benefits are calculated on each of the owners or partner share of the business. Valuing the business is an important process to provide accurate coverage. And term insurance often offers low premiums, and many times it's really a short term period. It might be 10, 15, or 20 years. So premiums can be affordable. Setting up the buy sell agreement is the key. One way of fulfilling the agreement at the death of an owner is through a cross purchase. We have the written agreement, buy sell agreement. There's agreed price. A policy is individually owned. It's paid for with after tax dollars. Let's take a look at how that's set up. So here we have Lisa and Ben, business owners. They enter a cross purchase agreement. A owns a policy on B and B owns a policy on A. So in this case, Lisa buys a life insurance policy on Ben. Lisa pays for the policy. She's the owner of the policy, and she's also the beneficiary. Ben buys a policy on Lisa. He pays for the premiums. He owns the policy, and he's also the beneficiary. So we use after-tax dollars for the premiums, and the death benefit will become tax-free. Now, this was a case where a fee-only advisor came to us and said, Lisa and Ben own a home medical supply business. They each own 50% of it. The business is valued at $1.1 million. If something happens to them, they do not have the resources to fund the agreement. It made sense to the advisor that we set up the buy-sell agreement and do a cross-purchase life insurance. So here we are. Let's take a look at this. For a $550,000 term insurance policy, business is valued at $1.1 million. Each owner has 50% share. We're looking at $550,000 term for 10, 15, and 20 years. In this case, they both qualified for preferred rate class, second best rate class. If we look at the premiums are very affordable. Now, Lisa's young. She's 37. Ben's also young. He's 41. So this is a very attainable way to fund a cross purchase in the case of one of the owner's deaths. Another common way to set up a buy-sell agreement is through a stock redemption. Let's take a look at how this works. So under stock redemption, the business is the owner of the policies. The business is also the beneficiary of the policies. In this form, the business buys and redeems the stock at one of the owner's deaths. So premiums are not deductible. Death benefit is income tax free. Estate gets a step up in cost basis. And when we look at how this works, in this case, this was an attorney or a law firm that came to us, and they have 4 partners. One's an older majority, owns most of the business, 70% of the business. There are 3 junior partners. Each owns 10%. And they also purchase 1 life insurance policy on each one of the owners. So the firm owns the policies and is also the beneficiary. At one of their deaths, the corporations will buy the stock from their estate and retires the shares. The remaining owner share percentage increases. So they have the same number of shares, but their ownership increases. All corporate money and no employee tax. 1 policy per owner. This solution makes for a much clean and easier transaction. On the cross purchase policy, you have every owner will have to have a policy on each of the others. So if this was not a stock redemption with 4 partners, each partner would have to buy 3 insurance policies. Imagine if there was 5 partners. That would be 20 insurance policies needed. So under the stock redemption option, with the business owning the policies, there's only 4 business policies involved, or life insurance policies. So let's walk through this. So here we are. We have the majority owner and the 3 additional partners. They enter into agreement. It's a contract or buy-sell agreement with the business. The business pays the premiums, purchases life insurance from the insurance company. The life insurance policies on the owners are owned by the business. The majority partner dies. So in that case, we want to make sure that his beneficiaries, his family is paid out for his portion of the business. The life insurance will be able to redeem the shares to his beneficiaries, it'll go to his estate, and then the estate will give the stock or shares to the business, and then they will be retired. So this is a good way, a couple of good ways to fund owner's death at disability. But let's look what happens if there's a disability in play. Disability buyout. Um, we often think about life insurance and can see how a death can happen. What often happens is that a disability can be overlooked, especially business owners, right? They work hard, they can put in many hours, and for some business owners, it's really hard to imagine that they could become disabled and not run their business. I mean, how many times have you heard, a business owner say, "Well, I sit at a desk," or "If I'm disabled, I can sit at a desk and I can still work." I mean, you've heard this before, right? So basically, a disability buyout policy will reimburse the business owner for the purchase of the disabled owner's interest. So when you sit with your business clients, and especially for younger clients, they are much more likely to become disabled than die. When starting the conversation for business planning, you may ask your client, how would the value of the business be determined, at the time of a disability, an owner's disability? How would the business be affected by the disabled owner? The disabled owner, pays for expenses. Disabled owner, is really part of generating income for the business. Have your clients walk through and what would that look like? How would the disabled owner's share of the expenses be paid? So there's a solution, and we'll talk about that in a little bit with business overhead expense. But that's a good question for the business owner or your client to walk through. Will a disabled owner continue to be paid during his disability? That's a big one, right? So, if they're going to continue being paid and they're bringing in less money, that may put the business in a hard spot. How will the healthy owner pay for these benefits? So you also have, let's see, there we go. So funding options, right? So let's walk through this. So we've already asked our clients, our business owner client, in the case of a disability with a business owner, let's walk through that. There's a couple of different ways that we can fund it. Business builds up cash reserves, right? So, and this is a time where you may be making less money because one of the business owners is not contributing. Business pays through cash reserve. That could be difficult. They could also borrow funds, right? So, and at this time, it may not be the best time to be borrowing funds from the bank, right? So we're kind of at a spot where we have a disabled owner. We may have some hardships with the business right now, but we're going out to borrow the funds to buy out the disabled owner. We could spread out payments from future earnings, and that may take quite some time. You may have another owner buy into the business, but is that really the best case scenario for the business? So there is a solution through disability buyout insurance. It can be funded in a couple different ways. It could pay a monthly benefit, it could pay a lump sum, or also it can pay a combination. Some business owners may like the combination, whereas they do get a monthly benefit and at a later date be paid a lump sum to buy out the business owner. So it's funded with disability insurance. It's used to provide funding for partners or shareholders to purchase each other's shares. It needs to accompany a buy-sell agreement. So once again, we talked about a buy-sell agreement with an attorney to make sure everything is clean at the time of a disability or death. Disability the same. Make sure we have that agreement in place. Benefits are calculated on each owner's partner share of the business. They need to have all owners apply, even if not approved. And not all owners will be approved due to previous medical history or for other lifestyle reasons. They may not get approved, but all owners need to apply. It can be structured as a lump sum payment, installment payments, or a combination of both. The valuing of the business is very important in providing the correct and accurate coverage. So here's Lisa and Ben, uh, disability buyout. The great thing about this option is they can both keep this policy to age 65. They can pay their premiums and have it available. Has a 1-year elimination period, a $550,000 lump sum paid at the end of 1 year, and the annual premium for Ben is $2,896. For Lisa, it's $3,421. Now, yes, this is quite a jump up from the life insurance, the affordable life insurance premiums that we talked about a few minutes ago. And that's all due to risk to the insurance carrier, right? So we know that Ben and Lisa both have a much greater chance of becoming disabled than they do dying. So the premiums are associated with that. Now, when we talked about life insurance, Ben's premiums were quite a bit more and almost double for the 20-year policy. And that's because males have a lower life expectancy. So for a male, age 41, older than Lisa, in male, his premiums were higher. Well, it's the opposite for disability insurance. And with females, there are higher claims, therefore the premiums are higher for females. But this is still a good option to make sure that if one of them becomes disabled, they're going to be bought out through this disability insurance. So still a great option for the business owners. So did you know what stops business owners from planning? Many will say they're too busy, they need more capital, not sure where to start, and for some, it's just not a top priority. So if you have any other comments and you've talked to your business owners and they have any comments, please put it in the chat. I'd like to see what comments that why your business owners are not planning as well. So you may want to present to them. Ask the business owner, if you went on vacation for 6 months, how would your business run, right? And they'll probably say not so well, right? Because they're not there to run the business. So becoming disabled is similar or kind of sort of like going on vacation for a period of time where you're not able to work or help. How are the bills going to get paid? How are your employees going to keep the business running? How are they going to get paid? Here we have a solution for that: business overhead expense. So business overhead disability for business owners. What does it do? It covers expenses to keep the business going, even if the owner is disabled, and it covers a varying amount of rent and taxes. It covers insurance, payroll for employees, even covers business loans. It doesn't cover a business owner income or any person sharing the business expenses. It doesn't cover a member of your profession, persons responsible for generating business income, or it also can't be covering immediate family in the business as well. So it may cover some portion of the salary of the business owner's temporary replacement, make sure they keep the business up and running. The premiums are also deductible as a business expense. Benefits received are then reportable as income, and although the benefits are taxable as income, the actual business expenses are deductible. It also covers the owner's calculated percentage of qualifying business expenses. So, one thing that we use when it comes to business overhead expense is your clients will need to submit a disability insurance quote request, but along with that, we'll also need this business overhead expense worksheet. And this can be found on their website, llis.com. You go under advisor tools, and you can pull this up and have your clients fill this out. And basically, this is a worksheet of the expenses that could be covered under a business overhead expense. Such as rent, utilities, telephone, office supplies, accounting, depreciation, taxes can go on here, professional fees such as accounting and legal, any licensing due we can get covered, liability or casualty insurance, workman's comp, employees' expenses such as salaries. How about different services such as security or landscaping? And then there's a subject for other fees as well. Once they fill this out, we're able to run a quote. We'll have their health and lifestyle information, and we can run a business overhead expense quote for your clients. So here's a case, a sample case here. Stephen, who's an accountant, he's age 31. He has a business making $75,000 a year, and he chose to apply for a business overhead expense. In the event that he's disabled and unable to make it to the office, he can get a monthly benefit of $10,000. His elimination period of 30 days. So it just basically means that from the time of onslaught of the injury or illness, he has 30 days before he can start accruing that claim or $10,000 monthly benefit. Also, this benefit will be paid for 12 months or 1 year. So as he's disabled, it'll have a 1-year benefit period. Also, what's nice about BOE insurance, it can cover residual and future increase option. Now, residual is a great rider because not all disabilities are full disabilities. A lot of disabilities are partial. So he may not be able to work 100% of his income, and maybe he's working 50% of the time. So as long as he's losing at least 20% of his income due to illness or injury, it will still pay a partial benefit, partial amount of the $10,000 monthly benefit. And this is affordable. So for Stephen, he was able to purchase this policy for $1,305 per year. This makes a lot of sense for his business. So, business loans. There's over 23 million outstanding business loans out there, valued at under $1 million. Some thresholds are making it harder for small businesses to obtain loans. Small firms employ about half of the private sector workforce. But lucky for your clients, we're able to offer a business loan protection. Now, this is a layered option on top of a business overhead expense policy, or rider, maybe we'll call it, and it can have benefits paid to a business loan in the event of the disability. Now, let's walk through that. So, what loans can be taken out for? It protects against practice if you have a loan against a practice or you purchase a business. Loans for purchasing equipment or building or land. Also, business practice or expansion. Loans for facility renovations or improvements. Increase in working capital or inventory or building. So the rider itself, it helps to secure a loan. So, we talked about some thresholds and some difficulties of offering loans to some small businesses. Now, in this case, this is great. The banks love when you have business loan protection. It helps secure a loan. It also makes the loan payment in the event of a disability. Benefits are assigned directly to the lender, which is great. The loan can be paid as you're disabled. And as we mentioned, this is a rider on the business overhead expense policy. You get a maximum of a $20,000 monthly benefit or $2 million total, including principal and interest. The elimination period can be 30, 60, 90 days, 180 days, 365 days. The longer you extend the elimination period, the lower the premium. Benefits can be payable to age 65 or the end of the loan. This really helps preserve credit ratings as well. So here we are. We have Craig. He's a dentist, and he purchased a dental office, and he wanted to look at business loan protection as well. So his business purchase price was $650,000. So he was able to cover a monthly benefit of $6,580 for his business loan. He also has an elimination period of 30 days. So that means you have to wait 30 days before benefits will be paid. Benefit period in this case is 10 years. But the nice thing about it is if Craig finishes off that loan or pays it off early, he can also cancel this protection. So annual premium for Craig is going to be $3,089 per year for this policy. So when you're sitting down with your clients and you ask, do you have a business plan if you become disabled? A lot of people, like we've talked about, business owners, they really don't think it's going to happen to them, right? They're going to be able to work through it. But when you're sitting down with your business owner clients, talk about, the consequences of a disability. Walk through how, things will be paid. Talk about disability buyouts, and get the conversation started. If you have questions, please reach out to myself or the disability team here at LLIS, and we're happy to answer any questions or help you out with your clients. So Key Person isn't a great option for companies who really depend on a specific individual within the company who's not a business owner. Only 1 in 5 business owners have Key Person life insurance. So what is a key person? Basically this is a person who is almost irreplaceable, right? So not a business owner, but they help the operations of the business. They help keep the business running. They may generate a lot of revenue for the business. This is someone that if they die, you will have some financial hardships. So Key Person Insurance will be able to help fund that. And let's walk through that option. So for a key person, we can apply for up to about 10 times the earnings normally considered. So we'll take a look at their income and get a multiple of their income. Verification of income. So obviously we have to show proof of income. Is there coverage on other key employees? They're going to want to know. Can we include some sort of salary continuation or other perks for the client's beneficiaries? And I'll talk a little bit in the next couple of slides. We'll talk about salary continuation and also other perks. In this case, the premiums are not deductible by the company, but the death benefits are generally tax-free. So as a key person insurance, it's a valued asset. It's also owned by the business. The business is the beneficiary of the policy, and premiums are not deductible. It's usually funded with term. So one thing to note, benefits cannot be assigned to the key employee. So this is not insurance for the employee. This is really designed to help replace that employee. And as a key person replacement insurance, it's really designed to protect small and medium-sized businesses from losses incurred from a critical employee who passes away or actually becomes disabled. So occupations that appreciate this type of coverage, a lot of medical practices will have key employees. Attorneys' offices, they'll have key employees as well. I'll give an example later on. Engineers, IT departments, architects, CPAs, and also salespeople. There are a lot of salespeople that are vital to the income of a business, and they're also a really good candidate for key person insurance. So, what can the funds be used for, right? So, your key person becomes disabled. This will fund recruitment costs. So, you're going to have to replace that employee, so it'll help recruit, maybe pay for temporary staff needs, and maybe even revenue replacement. If your key salespeople goes down, are you also going to lose those connections or those clients that the key salesperson is working with? So eligibility, you know, they have to be critical to the success of the business. Issue ages are between 18 and 56. The benefits, there's a couple different options here. So you can choose a monthly benefit, elimination period 90 or 180 days, up to $20,000 per month. You may also choose a lump sum, up to $500,000. And that lump sum can be paid after 6 months, a year, or even 2 years, up to $500,000. Or you can do a combination of both. You could do both a monthly benefit to help get through expenses, and then uh, after a year or two, you can get paid a lump sum. There is some benefits to doing a combination of the two. Instead of doing a $500,000 up front, you can also do maybe a monthly benefit, 250,000 in monthly benefits, and 250,000 in lump sums as well. So there's some flexibility there. So here we have Christine. Advisor reached out to us, and he has a business owner that started her business off slow, probably about 10 years before calling us. She's very artistic. She's very talented in her craft. In the beginning, she was really focused on local homeowners and businesses. And after a few years, she hired a few employees, and her business took off. So once again, her focus was the local and business owners, but a few of the people she hired definitely had some good visions. And while Christine is great at her craft and she knows framing, she knows art, and she's also brilliant when it comes to new ideas, she wasn't necessarily great at running the business, running the inventories, marketing, social media, until she hired Chris. Now, Chris is great. He is a key employee. He's responsible for the marketing and distribution for the company. He wrote a computer program to help automate the process. He saved the company thousands of dollars on inventory. He doubled the sales of a newly marketed product. So Chris is definitely a key person. He brings in a lot of money to the business. So this is someone we want to protect. Even with the new idea, she went from big artwork to a custom product where the client can build the frames at home. They can upload an image that can be printed onto the canvas or cloth and added to the frame. This was such a great idea. With Chris's help, he was able to use social marketing and marketing over the internet that the business really took off. So, working with a fee-only advisor, the advisor recommended Christine definitely get key person insurance because Chris is young. If he leaves the business or he dies, uh, she's going to want to make sure that she has a recovery for that. So here we are. Chris calls us. He goes through the telephone interview with LLIS, go through the quote process. It comes time for the interview. He goes through this and he's a little nervous on the interview, and he kind of agrees and understands what's in it for the business, but he asks, what's in it for me, right? Here I am going through the insurance process. I've got to answer all these personal and health related questions. I got to go through a medical. I got to give blood work. So what's in it for me? And you know what? That's a good question. So we let the advisor know of the situation, and he agreed and talked to Christine, and they were able to come up with a scenario where it's a win-win for both, right? So they were going to offer a salary continuation plan for Chris. So written agreements stating that Frames Inc. will pay if Chris dies before retirement, $50,000 a year for 10 years to his beneficiary. And if Chris makes it to retirement age 62 or later, Frames Inc. has agreed to pay $100,000 for 10 years. Not a bad plan for Chris. Now, this can be funded with a $750,000 cash value policy. The cash values in a universal life is an asset to the business. Values accrue on a tax deferred basis. Money out, income tax free. Payments to Chris are tax deductible. Cash values don't count against retained earnings. And as the benefits are being accrued and paid out, the advantage here for Christine and Frames Inc., it's kind of like providing golden handcuffs, right? So she doesn't want to lose Chris, right? Because she would lose a lot of revenue by losing Chris. And Chris benefits because he has a great continuation of salary. So at retirement, he's going to get $100,000 a year for 10 years. This is great. And if something happens to Chris along the way, his beneficiary will also get a benefit. So really win-win, both for Christine and Frames Inc. and also for Chris. And now this is also another reason why Chris will stay with the company. So let's take a look at the process on how that looks. So we have Chris and Frames Inc. Frames Inc. purchased a life insurance policy and pays premiums to the insurance company. Cash values are income tax free, no surrender charges. Death benefit income tax free. So salary continuation is tax deductible. Payments if Chris dies before all payments goes to Chris's beneficiary. And starting at retirement, there's a tax deductible salary continuation plan of $100,000 for 10 years. So salary continuation worked in that scenario. We were able to keep a key employee and give them a bonus plan. But there are also other types of bonus plans available. So here's a financial planning firm. They had an employee they wanted to offer a bonus plan. When you have good employees, you want to make sure you retain them. And any services, any benefits you can offer your employers will help retain your employees from leaving your business and going somewhere else. So in this case, they have a business or an employee that they really value. So they offer the employee a life insurance option where the business owner is owned, the policy is owned by the employee. The premiums are taxable income. Employee names the beneficiary. Now the business pays the premiums and they're deductible. So they're able to deduct that benefit they're providing to the employee. And there's several ways or several types of insurance that can be used to help fund this. So it can be used for term insurance, which may be an asset. So the employee can get term insurance for their families. They could also do a permanent life insurance with cash value. So this way, cash will build up over the years and also be a death benefit or a cash value to the client as well. Both are very good bonus option plans. So keeping your employees happy, you know, group benefits, right? Who doesn't like group benefits? If it's free, oftentimes it's a very valued benefit for employees, right? So you want to be able to attract good employees. You want to be able to keep good employees. The more benefits that you offer to your clients or to your employees, the better off the business will be. So, good news is here at LLIS, we can offer life insurance, short term disability, long term disability, dental, vision, and more. So, it's a good way to keep employees. And also, if your business is large enough, it's a good way for a business owner who maybe have some medical conditions that may not be covered through individual carriers, or they may be declined through an individual carrier, but if the business is large enough, they can do a guaranteed issue option. This is a huge, huge benefit. So if you have any of your business owner clients that have 10 or more employees and they can't get disability insurance or life insurance individually, we got to look at group options for them. That's a huge benefit. So let's take a look. So we can offer group life insurance, $10,000 minimum, 2 lives or minimum. It used to be 3 lives for business for group coverage, and we're very fortunate now to be able to offer coverage for as little as 2 people in a business. Uh, the more lives that you have, the less underwriting. The less lives, the more underwriting we're gonna have. Group long-term disability. This is a huge one as well. So the benefit amount can be anywhere from 40 to 67% of their base income, anywhere from $2,000 to $10,000 a month. Benefit period can range. So we're looking at benefit periods from as little as 2 years, 5 years, or age 65. And while it's very beneficial to go to age 65, premiums will be a little bit higher, but age 65 is premium. But the average claim is probably about 3 years on disability. So a 5 year option, a more affordable option to provide a benefit to your employees, may also be attainable as well. Elimination periods 90 or 180 days. So there's a lot of flexibility here. And a lot of employees, a lot of groups are also looking for short term disability benefits. Employees love this option as well. So long-term disability is great for the long haul. Short-term disability is good to pay short-term loss of income. And the same as long-term disability, you'll pay anywhere between 40 and 67%, depending on how you set it up. It will pay anywhere from $250 to $2,500 a week. Benefit period from 13 to 26 weeks. Elimination period anywhere from 8 days to 30 days. So let's look at how underwriting looks for different businesses. So here we have 2 to 4 lives. This is where we're going to have the most underwriting. Employee statement of health, medical questions, and also physician information is required. So medical underwriting is required. 5 to 9 lives, it gets a little easier, but still ask questions. So the employer questionnaire, it'll ask if any employees are not actively at work due to an illness or injury or have been out for 5 consecutive days or more in the last 12 months. They will also ask, do you know of any employee diagnosed with having any back conditions, cancer, heart disease, kidney disorder, liver disorder, strokes, or other serious debilitating illnesses? So obviously there's underwriting here, but 5 to 9 lives is still attainable to get group benefits. Now, the best is if you have a larger company, 10 lives or more. This is where you can get a guaranteed issue policy. So, once again, your business owners who have health issues, or your business owners who know that their employees have health issues and they're uninsurable or will pay very high premiums or table rates for their policies on individual coverage, this is a good opportunity to get those employees or business owners with coverage. So, what other services are available? There's a group life insurance as well. So, in this case, there's a few free services that can be offered with it. AXA Travel Assistance. This is a free service. It's a service available to your employees if they have any lost or stolen items, and this is travel assistance. Any medical, dental assistance, emergency medical transportation, Easy Connect, pre-trip research, precautions. A lot of travel services offered at no cost. Will and Legal Document Center. This is great. We all know the value of having a will, power of attorney. We know the value of estate planning tools. This is a service that's offered to employees at no additional cost. Now, I'm sure there's a certain level of planning that may not go as in detail as a financial planner would. However, this is a free service available to a lot of employees that would not normally have this service available to them. Once again, an added benefit that your business owner clients can provide their employees. So let's look at a case study here. We have an automobile dealership. They have 7 employees. They were able to get a benefit of $30,000 for non-owners, $75,000 life insurance for business owners. There's also a voluntary buyout for $20,000 available to employees. The annual premium for this option, $139. Why wouldn't you do that? Available services, also available additional free benefits for group disability, employee assistance program. This program is great. It'll help if you have anxiety, depression, substance abuse, chronic pain, insomnia. You have support through this program, health and wellness articles, uh, teen and adolescent issues. Uh, you need consultation with mental health professional, ongoing personal coaching sessions. These are all great benefits to have. If you privately went out into the private sector and had this gone through these treatments, you would pay hundreds, thousands of dollars. Once again, it's probably limited, but this is great. If you can help take care of your families or your employees and their families, that is a great added benefit. So we also had a financial firm. They wanted long-term disability for their group. There's a group of 5 employees, a monthly benefit of 60% up to $6,000. Benefit period to age 65. We always like to see that. Elimination period 3 months, and also offered a 2-year own occupation benefit. All for a premium of $22.69. That's an annual premium for 5 employees. So also the same financial firm also wanted short-term disability. They have 5 employees, weekly benefit 60% up to $1,500. 12-week benefit period, so it'll pay for 3 months. There's an elimination period of 14 days. Annual premium $12.42. Now, today we discussed a lot of opportunities for business owners, some good conversation to have with your business owners, talking about life insurance, disability insurance, and how we can protect business owners if there is a business owner that has a disability or a death. And this is important to help fund one of your partners or business owner partners if they have a death or disability, but also for yourself. So if your business owner was to die and you already had this buy sell agreement and you had it funded through life insurance, it's good to know that your family is also going to be protected. We talked about the buy sell, cross purchase, stock redemption, disability buyout, business overhead expense, business loan protection. great benefits that for salary continuation and group benefits. Um, if you have any questions, I'm sure you'll take away a few notes from today, but if you have any questions, please don't hesitate to give myself a call or Taylor or Kathy in our office. We're always happy to help. Give us a call. We're also happy to review any of your clients' policies or business owners' policies as well. Send them over to us and happy to help. Any questions?
Brian, you have a few questions coming in.
Okay, great.
If you check on your chat. Brian, can you check your chat?
Yes, I'm checking it. Yeah, so it looks like a question came in for firms with under 10 employees that purchase death or DI policies that require underwriting. What happens if one of the employees leaves and is replaced? Do they have to go through underwriting again? So a good thing about the group benefits is it's fully automated. So once the policy is set in force, the employer can just go online. They can add new employees or they can remove employees from that. So it's become very automated and easy process for the business owners. So I want to thank everybody for tuning in today. Once again, please give us a call, drop us an email if you have any questions from today's webinar. We're always happy to assist, and thanks for tuning in.